Hi guys, in continuation to my first presentation on Treasury Management System, in which basically we have covered up what is Treasury Management System, role of Treasury Department, a corporate objective of Treasury Management Systems. Now I'm going to touch what are the goals of Treasury Management System. Treasury Management System's goal oblique tasks are to design the financial strategy of the company and maintain the optimum mix of the debt and equity, reduce the cost of borrowing vis-a-vis the market benchmark rates without sacrificing and risk levels and the security level, to earn return on the investment or surpluses of the company without taking any risk towards the principal invested, to meet the business cash flow requirement, to manage non-funding facilities required by the business divisions, and with the objective of reducing the overall risk and the non-funding cost, to advise the group companies on the financial instruments structuring and the cost structure. In precise, Treasury Department main role is to manage the surplus cash is invested and the shortfall is borrowed through the borrowing instruments. The borrowing instrument for the short terms are overdraft facility, cash credit, working capital demand loan, export packing credits, short-term debentures, etc. The borrowing instruments for the medium terms are non-convertible debentures, term loans, and preference share. This all mentioned, discussed instrument I'm going to discuss in more detail in coming presentation. Now let's discuss about treasury management. Who are the business partners? With ever increasing piece of the change to regulation, compliance and technology in the financial sector, Treasury has increasingly become a strategic business partner across all the areas of the business, adding value of the operating divisions of the company. For example, working with the sales department to establish good financial control so that any trade discount offered and the payment methods agreed are beneficial to the business. Current market conditions and all reinforce needs of the corporate to ensure that their financial position is managed as efficiently as possible with no excess working capital tied up in the business. The all percept cash is the king is certainly as relevant today as it has always been. Treasury departments need to cover the complete financial environment from the capital structure and long-term investment to liquidity and working capital management. If Treasury can drive improvement in the purchase today and order to cash cycle, there can be a direct effect on the overall debt and investment requirements and thus on the capital structure required in the business. Now the question arises, if the treasury function is becoming more of a business partner, how can the department manage its time to ensure that day-to-day administration, processing and transaction execution is completed using the minimum resources? Answer to the question is that large companies automate the majority of their daily financial processing and administration tasks, supported by the policy standards, control and monitoring processes, embedding financial best practices across the whole businesses, integrating corporate system with those of their banking can achieve significant level of the automation, reducing the amount of the time that needs to be spent on tasks such as calculating the daily cash position. At the same time, the efficient use of the secure system can minimize the operational risk, increasing operational security and maximizing straight-through processing. Add to this automatic reconciliation of bank account data, and Treasury can then manage exception rather than even every items, giving them the time to devote to delivering value-added services across the company. Technology development is continuously providing new and enhanced way of corporate to manage their financial position. Example of this is development of Swift corporate access, enabling corporate to use Swift channel to communicate directly with the bank. Now let's discuss about what is Swift. Swift is a acronym of Society for Worldwide Interbank Financial Telecommunications, a cooperative society owned by about 250 banks in Europe and North America and registered as cooperative society in Brussels, that is Belgium. It is communication network for international financial market transaction, linking effectively more than 25,000 financial institutions throughout the world who have been allotted bank identified codes. The message are transmitted from country to country via central interconnected operational or operating centers located in Brussels, Amsterdam, and Virginia. The member countries are connected to center through the regional processors in each country. The local banks in each country reach the regional processes through a national network. The SWIFT system enables the members bank to transact among themselves quickly. International payments, statements, other messages connected with the international banking transmission of the messages taken place within seconds, and therefore this method is economical as well as time saving. Selected bank in India have been members of the SWIFT. The regional processing center is situated in Mumbai. And now discuss about advantage of SWIFT by using SWIFT. SWIFT provides the following or mentioned advantages for the local banking community. It includes your time tested, which is provides a reliable method of sending and receiving message from the vast number of the banks in a large number of the location around the world. Reliability and accuracy. This is further enhanced the ability in authentication facility, which has only to be exchanged with each counterparty before they can be activated or further communication. Instant messaging. Message really in instantly or enabling the counterparty to respond immediately if not prevented by the time difference. Access to maximum banks. Access is available to a vast numbers of the banks global for the launching new cross-border initiatives. Standardization of the structure. Since communication in Swift is to be done using structured format for various types of the banking transaction, the matter to be conveyed will be very clear and there will be no any ambiguity or for any short for the received to be revert for clarification. This is mainly because the formats are used all over the world on a standardized basis for conducting all types of a banking transaction. This makes the response and execution very efficient at the receiving bank and thereby contributing immensely to quality service being provided to the customer of both companies or both banks, sending and receiving, which includes automation activity. Uses of Swift structure formats for message transmission to counterparties will entail the generation of local bank internal records using at least minimum level of automation. This will accelerate the local bank internal automation activities since the maximum utilization of Swift a significant internal automation level is required. Now let's discuss about department structure. Cash and liquidity management has always been a key task in every company to ensure that debtor, creditor, and stock level are managed as efficiently and effectively as possible. When the business environment is more challenging, corporates can gain a competitive advantage through optimal maintenance or management of every aspects of their financial positions. The ideal Treasury has bank, front, mid, and back office. Now let's discuss about what is front, mid, and back office. Treasury departments are structured in different way to best meet the needs of organization. They vary in size and structure according to complexity of the business. In smaller companies, treasury operations are sometimes carried out by only one person, or maybe a role conducted by financial department. In a large complex international business, it is likely to involve a number of staff who might be either professional manager or as a regional treasurer or a specialist in the particular treasury activity, such as foreign exchange dealers or investment managers. Because treasury activities involves transactions with large number of money, processes are often set up so that no one single person carries on end-to-end transaction. This is basically helps in preventing the error or any, and at the same time fraud as well. Now let's discuss about front of what is the role of front office, middle office, and back office in more detail. Front office responsibility for carrying out day-to-day analysis and transaction relating to management of the funding, risk, cash, and liquidity. Middle office, only large treasuries will have middle office, often picking up some of the roles under the back office, commonly the reporting and analysis type role, but it varies enormously by organization. Back office, administrator and support. The front office and its main function are to validate, settle, and account for deals. Depending on the size of the company, treasury department can be centralized, decentralized, or a combination of both. Companies that are geographically dispersed can benefit from the decentralized, particularly where the local knowledge can be beneficial. Centralization, on the other hand, is often more cost effective for an organization. In a decentralized setup, there will be often be a small group of the specialties located at the head office who act as advisor. In more centralized operations, treasury may undertake an agency role where the day-to-day treasury decisions are still made at local level by the operational management, but the execution is centralized to obtain the efficiency and economic of scale. An in-house banking role is where the central treasury act as an internal bank with which all the substantial deals. There is no perfect answer to the question of what is the optimal structure of for a corporate treasury. Although the quest for best corporate structure is not new, international growth, better technology, and the more strategic responsibility of the corporate treasury have also led to this increased focus. Now let's discuss about what are the aspects which are making corporate to go into more efficient manner for treasury, like through economic environment. Corporations are increasingly seeking out growth opportunity in emerging markets. Companies are no longer waiting until they are well established and wealthy to carry out overseas expansion, and as a result, treasury departments are under the pressure to support business in non-traditional markets where the treasury processes may not be easy to manage the centrally. Technology affordability. Companies of all sizes are embracing the cloud, and this combined with the generations of mobile devices remove technology from being a hindrance to managing decentralized treasuries and keeping remote users connected. In effect, web technology creates an opportunity not only connect remote users and position in virtually any worldwide location, but also to ensure that processes and control are optimized. Technology is both our enablers and catalyst. Without it, Treasury cannot hope to make its processes more efficient and impose high level of controls. At the same time, the very process of rolling out a system triggers a transformation as whole way of doing things are examined, discarded, or improved. Optimizing the financial returns. A more strategic role of treasurers is becoming more responsible for collaborating with other teams and finding new way to add value to the organization. Senior management is realizing that treasurer can provide functions like risk management and can also drive efficiency and optimize the financial returns. Now I'm going to discuss about hybrid structure, how it can help. One of the strategies towards the ideal treasury is the implementation of a hybrid structure that takes the best of centralized and decentralized treasury structure and allow tailoring to the specific needs of the organization. Hybrid approach can provide full cash visibility across an entire operation, spanning geographic location, time zones, and offices, while providing local and regional support. The extent to which each of these functions becomes the focus depends entirely on the factors like size of the businesses, its business model, and the expected role of the treasury department within that business. Centralizing control to improve efficiency, businesses are increasingly bending the role treasury role to suit the way they went to work, to using technology and tools like re-invoicing center, payment factoring, and re-invoice and in-house banks. Firms are standardizing workflows that makes geographic expansion and additional workloads manageable without taking headcounts. Thinking more strategically, treasurers are no longer required simply to process data and present facts. They needs to be able to think strategically to utilize information to help the decision making process. Knowledge of the specific risk linked with the operation in certain region should be taken into account, and treasurer's skill set should allow them to present data appropriately in light of these risks. The key for treasury department is to try to ensure they have that right level of expertise in different geographic locations. In coming next presentation, I am going to discuss about technology. Till then, thank you.